better known as CZ, has predicted a future where nations facing insurmountable economic pressure will resort to printing an unlimited amount of fiat money specifically to acquire Bitcoin. This insight, shared via a tweet, is more than a bullish market call. It's a commentary on the accelerating and terminal decline of confidence in traditional, centrally controlled fiat currencies. Why is this prediction so potent right now? The core principle is scarcity. Bitcoin's supply is hard capped at 21 million coins. In contrast, central banks worldwide have demonstrated a willingness to expand their money supplies, a process known as quantitative easing, or more colloquially, printing money to manage debt, stimulate growth, or weather crisis. This action fundamentally devalues the currency held by citizens and reserves. CZ's statement directly addresses the rising global anxiety over fiat currency debasement, a concern already playing out in real time. Sovereign Bitcoin accumulation. We are already seeing the stages of this trend. Just this year, the United States, in a landmark move, established its own strategic Bitcoin reserve, a development we've reported on extensively, with holdings now estimated to be well over 100,000 BTC. This official action, regardless of its original sourcing from seized assets, legitimizes Bitcoin as a national strategic asset, on par with gold. CZ's point suggests that this is not the end, but the beginning. If major economies like the US, Europe, or emerging powerhouses in Asia begin to actively purchase Bitcoin with newly printed money to diversify their reserves, the impact on the BTC-USD trading pair would be nothing short of parabolic. The limited supply cannot meet unlimited sovereign demand without a massive price appreciation. Now, inflation hedge premium. This is the prediction that reinforces Bitcoin's primary value proposition as an inflation hedge. With central banks globally indicating a sustained commitment to low interest rates and expansionary fiscal policies to counter economic slowdowns, inflation expectations are baked into the long-term outlook. Institutional investors, including asset managers like BlackRock and Fidelity, which now run successful US-listed Bitcoin ETFs, will see CZ's prediction as a clarion call to front-run sovereign demand. This drives massive capital inflows from traditional finance, TradFi, into the digital asset space, drastically increasing the price floor for BTC. Impact on US stocks, which is the S&P 500 and Nasdaq. The interconnectedness between crypto and traditional stock markets is now undeniable. But this prediction presents a unique contagion risk. If nations are forced to print money for Bitcoin, it signals a systemic lack of trust in their own financial instruments, including government bonds. Now we'll talk about the flight to quality paradox. The money printing itself would be inflationary, likely putting upward pressure on long-term treasury yields. This could negatively impact growth and tech stocks, the backbone of the Nasdaq and a significant portion of the S&P 500, which rely heavily on cheap capital. Capital rotation, a portion of the institutional capital currently in large cap tech or safe haven stocks, could rotate into Bitcoin, viewing it as the superior strategic asset. While Bitcoin's volatility might inject some short-term turbulence into stock markets, the long-term trend would be a de-risking of portfolios away from fiat-denominated assets. This could lead to a decoupling, where Bitcoin's price soars even as traditional markets struggle with inflation and policy uncertainty. Now let's pivot to what this means for investors and citizens here at home in South Africa. CZ's prophecy hits a particularly resonant chord for economies that have already experienced high inflation and rand weakness. South Africans are already among the most active crypto users globally, often driven by the need to protect wealth from the rand's volatility and persistent high domestic inflation. CZ's prediction validates this behavior. If global central banks, including the US Federal Reserve, continue expansionary policies that devalue the US dollar, which the rand often tracks, the depreciation pressure on the ZAR will only intensify. We can expect to see an accelerated flow of the rand into Bitcoin, not just from retail investors, but critically from licensed South African financial institutions, which have been operating under the country's clear regulatory framework since late 2024. These institutions will view CZ's scenario as a clear signal to allocate capital into Bitcoin as a definitive non-sovereign hard asset reserve. The widespread adoption of Bitcoin by nations, as predicted by CZ, would solidify its role as a global, frictionless currency. For South Africa, a regional economic leader, this could lower transaction costs. So this means that further lower the cost of cross-border trade and remittances to neighboring countries, bypassing expensive traditional banking rails. It also means boost tech sector, so solidifies South Africa's position as a regional hub for compliant, institutional-grade crypto infrastructure, attracting foreign direct investment or FDI into its blockchain and fintech sectors. In essence, CZ is framing Bitcoin not as a speculative commodity, but as the inevitable destination for national wealth in an era of fiscal irresponsibility. This narrative is a foundational pillar for a new multi-trillion-dollar market structure. The speed and intensity of the market's reaction to CZ's tweet, driving significant volatility in the BTC-USD pair, is profoundly influenced by our second major theme, which is the integration of artificial intelligence into trading. The narrative of nations acquiring Bitcoin is precisely the kind of high-impact, low-probability event that AI-driven trading algorithms are designed to exploit. State-of-the-art AI trading systems are no longer just looking at price action. They are constantly scoring social media, financial newswires, and regulatory filings for key terms like strategic Bitcoin reserve, CZ, fiat debasement, and unlimited printing. CZ's tweet, being a high credibility source, instantly registered as a major bullish sentiment shock. The result? AI-driven high-frequency trading bots, which manage billions in institutional capital, instantly initiated buy orders on the BTC-USD and BTC-ZAR pairs, seeking to front-run the anticipated sovereign demand. This is why we saw a sharp, immediate spike in the BTC price and trading volume, underscoring how AI amplifies the human element in crypto markets. The volatility isn't purely organic. It's an algorithmic reflection of human fear of missing out and the core belief in Bitcoin's scarcity, rather. As nations like the US solidify their Bitcoin reserves, they will inevitably turn to AI for managing these digital assets. An AI Treasury Department wouldn't market buy $100 billion worth of Bitcoin, which would crash the dollar and rocket the price. Instead, AIs would be deployed to execute sophisticated, non-market moving accumulation strategies, a type of stealth accumulation. This involves dark pool orders, time-weighted average price execution across dozens of global exchanges, and volume-adjusted execution to acquire millions of BTC with minimal impact. Now, AI is now running complex simulations on the macroeconomic fallout of CZ's prediction. These models are stress testing the US dollar's reserve status, projecting inflation figures based on different levels of sovereign BTC acquisition, and providing policymakers with scenarios on how to either counter the narrative or embrace it by announcing their own larger strategic reserves. This is the shadow war of economic policy being fought by algorithms. For South African retail and professional traders, the global AI-driven volatility means risk management is more critical than ever. South African exchanges, while mature, have lower liquidity than their global counterparts. When AI bots on global platforms like Binance or Coinbase trigger a massive price swing based on a CZ tweet, the local BTC-ZAR price must quickly catch up. This lag can be an opportunity for high-speed local arbitrageurs, but possess a significant risk to the average investor. The Financial Sector Conduct Authority in South Africa, which has been proactive in regulating the space, will need to increasingly monitor for algorithmic manipulation. The rules of engagement, especially concerning market integrity, must evolve to account for AI's ability to create flash rallies and flash crashes based on real-time news and sentiment. The very fact that South Africa is a regulated environment means institutional AI is more comfortable operating here, but the regulator must stay ahead of the curve. The takeaway here is that CZ's prophecy isn't just a market event, it's a data event that has been ingested, analyzed, and traded on by artificial intelligence systems within milliseconds, fundamentally changing the price discovery process and confirming Bitcoin's status as a geostrategic asset. All of this institutional and national adoption, driven by CZ's prophecy and amplified by AI, is utterly dependent on the underlying technology, which is blockchain. The coming wave of sovereign Bitcoin demand places immense pressure on Bitcoin's core infrastructure and related layer 2 solutions. A nation's central bank buying Bitcoin is one thing, but transferring it, auditing it, and using it as collateral is another. If multiple nations begin making large, regular purchases, the competition for block space on the Bitcoin network will become fierce. The fixed capacity of the Bitcoin block will push transaction fees, known as gas, up significantly, making small retail transactions more expensive and emphasizing Bitcoin's use purely as a settlement layer for large value transfers, truly digital gold. This validates the design philosophy of Bitcoin as a high-value final settlement network, not a daily payment system. This looming scarcity makes layer 2 solutions like the Lightning network an absolute necessity. Lightning, which allows for instant near-zero fee transactions off the main chain, will become the plumbing for using Bitcoin, even as central banks hold the base layer BTC. Imagine a future where the US Treasury uses the Lightning network to instantly transfer a portion of its Bitcoin reserve to a friendly nation in a trade deal, bypassing the SWIFT system entirely. CZ's prediction accelerates the timeline for this scenario, making the development of robust, institutional-grade Lightning infrastructure a multi-billion-dollar race. For nations to trust Bitcoin as a reserve, they must be certain of their holdings and the network's integrity. We are seeing a surge in projects focused on using AI for blockchain security and auditing, which is the AI-driven custody. Now here, AI will be used to manage the vast, complex private keys of a national Bitcoin reserve, ensuring 24/7 unhackable cold storage protocols and monitoring for internal or external threats. DeFi and central bank digital currencies, which are CBDCs, while central banks are designing their own CBDCs, CZ's statement suggests a fallback. They might be forced to bridge their CBDCs to the Bitcoin ecosystem to lend them credibility and stability, essentially creating synthetic fiat assets collateralized by the hard, scarce value of Bitcoin. For South Africa, this infrastructure demand presents a massive economic opportunity. South Africa's sophisticated financial sector and regulated crypto market, as we reported on, are perfectly positioned to become a regional hub for institutional Bitcoin custody and blockchain service provision for the rest of the continent. The local technical expertise in blockchain development could be an exportable service, creating high-value jobs. As the South African Reserve Bank continues its exploration of a digital rand, the global push towards Bitcoin as a reserve asset will pressure the SARB to ensure the digital rand is interoperable with, or at least benefits from, the stability of the Bitcoin network. This is the difference between a successful national digital currency and a failed experiment. Changpeng Zhao's prediction is a stark moment of clarity in the world of finance. It is the thesis that the only cure for a collapsing fiat system is the adoption of a perfectly scarce, non-sovereign asset. This is driving a strategic shift in the US, amplifying volatility through AI trading and demanding a rapid maturation of global blockchain infrastructure. For you, the investor, the message is clear. The transition from traditional debt-laden assets to digitally scarce assets is no longer a debate for the distant future. It is a mandated event, the opening salvo of a new era of national finance, where the supply cap of 21 million Bitcoin is the ultimate limit on a world struggling with unlimited money printing. We will continue to track the US strategic Bitcoin reserve, the algorithmic trading frenzy, and South Africa's evolving role in this digital gold rush. That's all we have for today. Thank you for watching.